Good evening, guys. You can see time is around 6:34. Let's look into today's NIFTY as well as bank Nifty trade analysis. And let's dive deeper into and analyze how you could have taken positive trade scenarios. So what I would have considered is I would definitely consider Monday's VWAP. So this is Monday's VWAP level, guys. So it might help in some sort of confluence over here. You can see the market broke the structure and retraced and failed to close above this VWAP level and further continuation of break of structure, clearly signifying bearishness. So definitely Monday's VWAP level is what I would always consider. The 200 moving average, the 100, the 21, the 9 moving average, and then this was today's VWAP level. So what I usually do is to mark the mid of the first candle as well as the 5 minute zone. And here you can see clearly that the market here swept the previous day's high over here. You can see this is the previous day high. So the market swept this previous day's high, failed to close above these levels, and price failed to sustain above these levels. In case if the market sentiment would have been bullish, the market would have gapped up and showed some kind of positive momentum and consolidated in a sideways manner and continue further bullish. This is how the market usually behaves. But you can see what happened here is that the market swept this previous day's high and immediately showed some sort of rejection and even broke the first candles mid of the first, even broke the low of the first candle, clearly showing a clear sentiment towards the downside, a clear break of structure. But the market was failed to aggressively sell towards the downside because there was 200 moving average support over here as well as the pivot level support. So the market came rejecting price from this pivot, the 200 moving average support over here and continuing further positions. But again, the market mitigated this fair value gap over here. You can see there was a fair value gap over here. So the market mitigated in case if the market sentiment here would have been bullish, right? The market again after this clear break of the structure, retracement to this fair value gap over here, another break of structure, the market would have continued further bullish like this. But what happened here is that a lot of buyers might have entered here, seeing this kind of huge bullish candles and to target all these levels. And the market mitigated this fair value gap and showed a bearish sentiment by closing below this previous scene. This is the first stock formation, and this stock formation is very important because here the market manipulated the buyers to enter the market and immediately uh, came to this important zone over here. This important zone was a fair value gap over here. So came all the way to this important zone over here, mitigated these levels, grabbed all this liquidity and aggressively sold towards the downside and clearly broke structure with huge displacement as well as imbalance with fair value gaps over here. So the last up move before it broke structure towards the downside is this huge bullish candle, but the market broke the structure towards the downside with a fair value gap over here, and you can see the market came all the way to this fair value gap, mitigated these levels and continued further selling towards the downside. So this is the first stock formation over here, or you can consider even this candle, which even broke towards this low as well. So what you can see here is that the market even broke this level as well. Uh, Even after seeing this rejection of price from this 200 moving average also, you could have clearly taken one long position over here, keeping your stop loss just below this candle and targeting all the way to this fair value gaps. In case if the market sentiment would have been bullish, always the market would have continued further bullish and even mitigating this high also. But what we need to remember is that this high is a significant high because it swept previous day's high and closed within this range, clearly showing some sort of rejection and especially this kind of huge bearish candles over here, clearly showing a lot of selling pressure from the from these levels over here. And aggressive selling even after this kind of huge bullish momentum after price taking support from this 200 moving average and showing some sort of positive momentum towards the upside. The market mitigating this fair value gap zones over here, rejecting price and continuing further selling towards the downside. And this is the fair value gap price. So where the market broke the structure towards the downside, and this is the first market structure shift towards the downside. And the overall sentiment is bearish only if you look into this. Only here the market showed some part of bullish momentum, but definitely the market fell to previous liquidity levels and continued further bearish. So you can see this aggressive momentum towards the downside raise where the market broke this low, and after this the market kind of more in a very not so aggressive in a channel pattern over here. You can see this kind of channel pattern showing not so good bearish sentiment. And what we can see here is that the market swept this low, but immediately came back to range and closed above these levels. And this is the change in state of delivery over here, the last series of up candles before it broke structure towards the downside. So the market mitigated this fair value gaps and broke towards the upside over here. This is the first change in state of delivery. Now you can consider this first change in state of delivery. The market closed above this, again retested this levels since there was a fair value gap over here. So this is one fair value gap where the market came, mitigated, failed to close below these levels. So if you try to plot your anchor gap level, you can see clearly the market showing some sort of support over here. Where this candle tried to break this level towards the downside, but immediately followed by another bullish candle. So for quick scalping, guys, you could have clearly taken this position, keeping the stop loss just below this candle and targeting all the way to this fair value gap over here. So this is not a Ganser. This is the fair value gap over here. So you could have targeted all the way to, or you can consider the mid of the fair value gap. So this is the mid of the fair value gap. So this is where you could have just scalped here after seeing this kind of huge bullish candle, keeping a stop loss just below this candle as well. And after this kind of huge bearish candle over here, guys, this is a huge bearish candle. And why this candle is very significant is because this candle over here, guys, came and reached a major supply zone over here. The supply zone is the fair value gap over here, where the supply zone previously broke this first candle's low over here. You can see a clear break of structure. So with imbalance, the market came, mitigated this fair value gap and showed some kind of aggressive momentum towards the downside. And this candle over here broke the 9, the 21, as well as the base VWAP level, showing a clear bearish sentiment. So in case if you could have taken short position over here, keeping a stop loss just above the candle, and you could have targeted this liquidity levels over here, or you could have used this projection block price. So I would definitely teach you projection blocks. So from this high to all the way to this low over here, and if I use this projection over here, so definitely I would target the 100% level. This is the first target which I would always recommend you. So this is the 100% level. This is the projection block, and the next target is, so let me take a second. So the next target is this 2 point and minus 2.5 levels, and you can see exactly this is where the market came and reached over here. You can see that this is exactly where the market came, the mid of these 2 and minus 2.5 levels. Projection block is as simple as it is. So I will show you a setting. What this is levels, the 0 level, the minus 1, minus 2, and 1 level, and minus 2 and minus 2.5 level. So from 0 all the way to 1 level over here, and after that the minus 1 level, the minus 2, minus 2.5, as well as the 4 level also. In case if the market extends towards aggressive sell towards the downside, you can expect this close to also reach. So this is the projection block, guys. And how you need to mark this projection block is that the last up move, the project manipulation before it market changes sentiment from being bullish to bearish with this upward momentum, guys. So this is the last up move before the market change its sentiment from being bullish to bearish, and you could mark this swing low to swing high and use these projection blocks, and you could expect target levels, and this is the 100% level, and this is the 2 point minus 2 and minus 2.5 levels, and you could have easily targeted to these levels as well. So in case if you might have kept your stop loss just above that candle itself. So this is one scalping you could have taken. This is one short position you could have taken. And you can see clearly the market after mitigating this fair value gap, market showing some sort of bullish sentiment. So you can see another clear break of structure over here. You can see a clear break of structure. And the market again retraced to these levels. And if you consider this bullish momentum candle, the last down candle towards the last up candle, so the common point within that to the common point within this. So you can see the market came and mitigated this fair value gaps over here. Since there is only one fair value gap over here, so this fair value gap has been mitigated. So there is only one fair value gap over here. So this is where the market came, mitigated this fair value gap over here, and continued further bullish. So in case for target levels, you could have used this fib extension levels over here, the common point within this, to the common point within this, to the common point within this, and targeting all the way to 100% move. But here you can see the market came almost all the way to this 100% move. But the market was not able to cross this levels, keeping the stop loss just below this candle and targeting it all the way to this 100% level as well. So targeting all the way to this 100% level as well. This is how you could have easily targeted. But here you can see what happened here is that the market broke the structure high as well. You can see clear another break of structure over here. A clear break of structure, and after that the market retraced, and this is not a proper retracement, guys. In case if you consider this retracement, the market didn't retrace to 0.3 level, so you can consider this momentum towards the upside as a single swing itself. So if you consider and extend it all the way towards this level, you can see the market here retraced to 0.38 level in here. This is the 0.38 level where the market has retraced. So what we could have expected is that the market after retracing to these levels, since the market even broke this structure high as well, another break of structure. So you could have expected some sort of support at this levels in here. So the market came, mitigated this order block, and in case if the market sentiment would have been bullish, the market would have clearly broke the structure towards the upside. But here, because the market reached a major supply zone over here, the market failed to make a higher high. Instead, the market broke structure towards the downside, clearly changing the market sentiment from being bullish to bearish. And this is another clear chalk formation. Once it's this candle only, guys, you have seen once if this candle breaking this 21 moving average towards the downside, where the market swept this previous candle's high over here. You can see this bullish candle over here, where the market swept this previous candle's high, rejecting price from these levels. But here, this is a low resistance liquidity run, guys. This is not a high resistance liquidity run. So in case of the market showing some high resistance liquidity run, what would have market done is to make a sweep above this previous high over here and found a chop over here. But this is a low resistance liquidity event, so you can expect the market to break when the market all the way retraces back to these levels. You can expect the market to break this level, this level as well, and continue further bullish as well. So even after the market swept this previous candles high and closed within this range, and even broke this 21 moving average, and here you can see clearly broke this 21 moving average over here and closed below these levels. And considering this the major supply zone over here, and previous market structure shift where the market broke structure towards the downside after showing some sort of positive sentiment. Either you could have taken your position here as well, or after this 21 moving average being broken towards the downside is where you could have taken one long position as well. But you can see after this there is no retracement on the guys. You can see there was aggressive selling and the market continued all the way to these levels over here. This is one point of interest, or we can consider these levels to be the -2 and -2.5 projection levels, and that's where the market came all the way to here. So in case if you ask me to find the fib extinction levels over here, so if I try to draw the fib extinction levels as these swings over here, guys, we swing high over here, we swing low, and the swing high are of the same colors. So let's consider the extremes on it. So this high over here to this low to all the way to this high over here. So if you consider this swing momentum, so you could have targeted it all the way to 1.68 level, or in case if the market has not yet reached 1.68 level, you could have blocked the mid of these levels and the 0.5 mid of the 1.6 as well as the 100% level where you could have easily targeted. So or the price breaking this 200 moving average in a 1 minute time frame also, you can consider the market sentiment to be bearish, right? So you can see here the market shows some sort of support and showing some sort of positive bullish sentiment where the market took support from this 200 moving average, but immediately reached the major supply zone over here and clearly broke this towards the downside. And you could have waited for retracement, but definitely the market didn't retrace to this level size. And you can see market again broke structure towards the downside. Even this swing also has been broken. So this is where you could have easily taken another short position over here, where the market shows some kind of shows some aggressive selling over here. So, with no fair value aspects, but definitely you can see how the market continued all the way towards the downside. Either you could have taken your short position once if the 20 moving average has been broken, or the 200 moving average has been broken towards the downside. And this was one beautiful trade setup where you could have easily taken this, keeping your stop loss just above this candle and targeting all the way to this sell side liquidity over here. So this was the first target where you could have taken. This is one liquidity level, guys. This sell side liquidity over here. So this is one target levels where you could have captured. And what you can see here is that if you try to decode here, you can see the market clearly broke the structure lows over here. This is a clear break of structure here. And this is the last up candle before it broke structure towards the downside, and you can consider the point of interest over here. Again, the market failed to make a higher high. Again, you can see the market broke this lows also here, clearly showing another break of structure. And if you consider this break of structure, if you consider the last up candle before it broke structure towards the downside, the count point from this to the count point from that. So you can see the market here came and swept this buy side liquidity over here to reach a major fair value gap over here, or you can consider the 550 levels over here. This is the 550 level, and the VWAP over here is this is the Monday's VWAP level. This is what I initially told you that this Monday's VWAP level will play a significant role. Either here you can see it acted as a support over here, and once it's broken towards the downside with a imbalance or fair value gap, again the market retraced back to this fair value gap over here. So retraced back to this fair value gap and um, acted as resistance over here and continued further selling towards the downside. So I hope you're understanding guys what I mean. And you can consider this to be a mitigation block as well. So uh, I would definitely teach you later guys mitigation blocks. So this is the failure swings over here. So this is one failure swing, but this is not failure swing, guys. You can see clearly the market struck this liquidity above. So this is a high resistance liquidity sweep only. Liquidity above struck and broke towards the downside. In case if you ask me to find a Fibonacci extension levels of this swing momentum over here, the common point within this, so the common point within this to the common point within this. So you could have easily targeted all the way to 1.67. I hope you understand it, guys. So this is where exactly you could have targeted after this swing momentum towards the downside. So short position over here, guys. Keeping your stop loss just above this candle itself and targeting it all the way to 1.68 level. So I hope you're understanding me. So this is what I would definitely recommend anyone. And you can see here the market failed to sweep this and close below this low. Here you can see there was multiple sweeps of liquidity over here where the market failed to close. But after this previous swing low has been swept, immediately the market closed above these levels. And you can consider this to be the first market structure shift towards the upside. And after this, you can see the market came and retraced back to this optimum trade entry zone, or you can consider the 50 levels as well. So if you consider the common point within this to the common point within this, you can see the market reaching all the way to this zero point 0.5 as well as the zero point 0.6 level. And for better confidence, you can use your anchor gap level as well. And once if this level also has been broken towards the upside, is where it would have easily taken long position over here and targeting all those buy side liquidity. So this is one buy side liquidity where you could have taken and even just target this buy side liquidity also. So or you can see this is the last move before it broke structure. So the market came and mitigated all the way to this order block level. So this is the clear 1 minute order block. So it would have either entered long position over here once this price has been closed and target this levels. But you can see there is no clear price action being followed after this since there is since that's expiry also. So you could expect some kind of premium decay, and that's what happened here. So this is my trade analysis, guys. So in Bank Nifty, I hope you're understanding what I'm saying. So let me recollect what I told you from first price. So you can see aggressive selling towards the downside, where the market swept this previous day's high, rejected price from higher levels, and shows some aggressive momentum. Took support from this 200 moving average, where the market taking support from this pivot levels as well as rejection of price from this 200 moving average, showing a strong support over here. So in case if you might have expected the market sentiment to be bullish, you could have taken long position over here, keeping your stop loss just below this bearish candle itself and targeting all the way to this fair value gap over here. And after this, you can see the market showed some sort of aggressive selling and continued with the market structure shift and closing this swing low as well. And this is the first momentum base where the market changed its sentiment from being bullish to bearish after reaching a higher time frame, the key supply zone over here. And after this momentum is where we could have expected the market to mitigate this fair value gaps and continued further bearish. So you can see the market came and reached the major supply zone over here again and mitigated these levels and showed some kind of aggressive momentum towards the downside and continued. So and along this way, you could have taken multiple entries also with better confirmation in short positions, guys. So that's it about Bank Nifty. So let's come into Nifty 50. In Nifty 50, so this was yesterday's price. And if you can see today, this is the Monday's VWAP level. So Monday's VWAP level definitely will show some sort of influence over here. And this is today's VWAP level. Whenever you find a wider pivot range, right, so see if you can say this range over here, with comparison to this range over here, you can see there is a bit wider range, and when the market consolidates within this pivot range, guys, you can expect the market to be a sideways manner. So let's take out this levels over here. So whenever the market is consolidating in a sideways manner, it means that on that day the market has a wider pivot range. So and vice versa as well again. So whenever the market has a wider pivot range and the market is trading within this pivot range, you can expect the market to go sideways as well. And you can see even in Nifty 50 also the market swept this previous day's high, rejecting price from these levels and closing within this range and breaking the first candle's low as well. You can see a clear break of structure towards the downside with aggressive momentum with fair value gaps as well as imbalance as well. So apart from that, what we usually do is to mark the mid of the first candle. So let's try to mark the mid of the first candle as well as 5 minutes zone as well. So if you consider the high over here to the low over here, so let's try to mark this 5 minutes zone. Okay, this is 5 minutes only. So if you see here, right, what happened here is that after this kind of aggressive momentum, the market struck this previous swing low over here, failed to close below these levels and show some kind of bullish momentum, retraced, mitigated these fair value gaps and failed to close above these levels, where price ejected from the 200 moving average as well as the gap level and showed the first market structure shift over here. This is the first bearish momentum, or you can consider the market structure shift, where initially the market swept this previous swing low here. You can see where the market swept this previous swing low, but failed to make a higher high and broke structure. And this momentum towards the downside is at the same time happened even in Bank Nifty as well. So if you look at 939 days, so this is what happened at 939 also. So this momentum towards the downside is. So let me show you this 939. So this momentum towards the downside, when the market broke the structure towards the downside, that's what happened here as well, where this momentum, where the market price failed to close above the 200 moving average and broke towards the downside, is where the market changes its sentiment from being bullish to bearish. So that's when you could have easily exited in case if you might have holded on your long position and focus your positions on taking short. So this is a clear 1 minute order block. So you can see, even though the market payments swept this liquidity levels over here, the market again retraced back to these levels over here, the 1 minute order block, again rejecting price from these levels and continuing further bearish. So what you can see here is that the market here failed to close below these levels, but rejecting price from these levels over here. This is a clear sell side liquidity sweep over here, where the market swept this previous swing low and closed within this range. And you can see here there was aggressive selling over here, but here the market failed to close below these levels and even here as well as. So if we consider this swing momentum here, the market here also failed. Even though the market showed some kind of bearish sentiment, you can see clearly the market here broke this structure, but immediately came back to range where the market even closed above those levels. It is a clear market structure shift, market sentiment changing from being bearish to bullish. So after this, you could have plotted the retracement level size. So if you consider the common point within this to the common point from this, the market retraces back to the 0.38 levels over here, showing a clear demand over here. So after this, you can consider this momentum as well. We break a block level as well. So let's not get deeper into that. But what we need to see is to plot the anchor graph level here. You can see clear support over here is the anchor graph level over here. And in case if you try to plot the fib extension levels in here, the common point we can use, to the common point we can use, to the common point we can use. So you could have targeted the 100% here. So this is exactly where we could have targeted is the 100% here. So stop loss just below this candle over here. We came just below and targeting it all the way to this 100% level over here. So this was one trade opportunity where we could see the price taking support from this anchor graph level, the 21 moving average over here, the 9 moving average as well. And you could have targeted it all the way to this 200 moving average, and you could have captured this momentum towards the upside. After this market structure shift, you could expect the market to continue further bullish since the market even swept this previous swing low over here. So you can see this is one sell side liquidity sweep over here, where the market swept those liquidity levels, reached the optimum trade and the 0.38 levels and continued further bullish. But here the market reached the 1 minute order block levels, right? Where previously the market showed some sort of bearish sentiment. So you can see after this the market aggressively sold towards the downside, but failed to close below the previous swing low over here. But here the market broke this towards the downside. And if you consider the last up candle over here, so this is the last up candle. So this is a clear 1 minute order block over here, where the market clearly broke this structure low over here. You can see a clear chop formation over here with imbalance and aggressive selling, as well as the 200 moving average resistance over here, as well as 1 minute order block resistance as well. And again, the market mitigated these levels, rejecting price from these levels and continued further bearish. And you can see this kind of huge bearish momentum towards the downside. And in case if you ask me to plot the fib extension levels over here, the common point within this, to the common point within this, to the common point within this. So what you could have targeted is the 1.68 level. This sells liquidity over here. So this is one target levels where we could have captured. So this is one sell side liquidity. Or the 1.68 level is where you could have targeted us. So you can see clearly a 1.68 level, and we could have targeted it all the way to 2.6 level as well. But you can see price almost came to these levels, but failed to close below these levels. So, or as long as the market is trading below the 9 as well as 20 moving average, you can see this candle over here, where price closed above these levels is where you could have easily exited your trade. But in case if you ask me to plot this projection block, guys, and let's see, like in case in Nifty 50, if you consider this projection block over here, so the last down candle to up candle over here. So let me plot the projection block over here. So if you ask me to plot the projection block here, so this is the first target, guys, the 100% move over here. So you can see clearly the market came all the way to this 100% move. And the next target is this 2 point as well as the minus 2 as well as the minus 2 point. You can see exactly this way that minus 2 level is. So if you like find it properly, this is exactly where the market came. The minus 2 as well as the 2.5 levels is where exactly the market came. So keeping your stop loss just above this order block level and targeting it all the way to this minus 2 as well. So this is how you could have traded these trades. After this, you can see definitely the market after a huge selling pressure for some kind of buying momentum towards the upside as well. And if you look into a 5 minute time frame, what you can see here is that if you see yesterday's aggressive buying over here, and if you try to plot the low of this candle to the high of this candle, the optimum, we can see the market reaching all the way to 0.6 levels or the 50 levels. So you can expect some sort of support at these levels, the golden zone ratio, and that's where the market came all the way. So I hope you're understanding, guys. In case if you find my videos helpful, please like, share, and comment, and keep supporting my channel, guys. And in case if you have any doubts, please leave a comment below. I will definitely be glad to clear all your doubts regarding trading NFT as well as Bank Nifty. And apart from this, if you have any doubts, also you can definitely message me on my Instagram, guys. I have entered my Instagram over there, so you can message me over there. I will definitely respond in case if you have a genuine problem regarding trading also, guys. So keep pursuing, guys, and try to learn my videos and look at my videos very carefully and analyze each and every momentum, how I usually trade and how I usually use my trading knowledge in and how I apply this knowledge in my day-to-day trading life as well. So I hope it might be helpful for you. And in case if you find it helpful, please uh, maintain that consistency and a better day would come and you would be able to trade as well. Yes. Thank you.